All right. Hi, everyone, and welcome to the Daily Currency Call by Forex Trading Asia. And I hope everyone has had a great week so far. And thanks for joining us again to the regulars, and welcome to anyone that is new to the channel too. So this is episode 397. We are approaching 400 very soon for the 15th of October. And just a quick introduction as well, if you are brand new, this is the Currency Call, where we analyze the currency pairs as follows. So Aussie and Kiwi on Monday, Tuesday, the Euro, Wednesday, the pound, yen, and gold on Thursday. And then on Friday, we do the CAD and also crypto, Bitcoin and Ethereum specifically. Now, this is the Currency Call, where you will get market economic updates, the key support and resistance levels, trade ideas, and of course, much more. And this Currency Call is going to be very beneficial to both the long-term investors and the short-term traders. And here we will go through what could move prices, the possible trade ideas as well associated with those movements, and importantly, highlight the potential targets and also the risks. A disclaimer here as well: any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. All right, so just to start things off with today, and it was a little bit eventful last night, and Jin posted in the trading chat as well in the EchoFin group. We did see the US dollar pull back as well in regards to that 94 breakdown as well. So what I'll do here, just to start things off with, is get the charts up, thanks to Samtrade. And hi, everyone, as well. There's been a lot of activity as well in the trading chat, and I woke up to 99 messages. So that was good to see that people were taking advantage of the community as well. So that was fantastic. Now, just briefly touch upon the US dollar index. I've got the 4-hour time frame up here, just to really emphasize this range that we have been holding as well. Make sure you vote yes as well for Gim Hong Tarap. I hear he's quite talented as well. So now we did see a break below 93.80, and it was quite interesting to see this as well. I was monitoring this yesterday afternoon, and it was quite handy where things were being called out, and we had a nice push on the New Zealand dollar in particular. The Aussie dollar was there. I actually took the Aussie instead of the Kiwi, but that's the relevancy that it has if you do monitor this as well. And we are seeing, we did see a push back above 93.80, and we're, tested 94 flat. But what I want to quickly go to now is the news here, just with Forex Trading Asia and the economic calendar as well. So it was interesting last night. Again, we touched upon that tonight is really going to be more prevalent for price sensitive news, but we had a little bit of a miss on the core PPI month on month at 0.2, which was a little bit of a miss, in fact. And then we also had the PPI coming in at 0.5. Again, this was a slight miss, though, not a significant miss. And then the initial jobless claims, the 293 was a pre-pandemic figure. So there's not a lot of people claiming initial jobless claims. So that was quite interesting to see. But we had equity markets rally as well. So it was a time to really take advantage of that US dollar weakness. But it seems quite happy not to really fall back below this range and below that 93.70. Quickly touch upon tonight's news. Now, Jin did mention this yesterday in the Currency Call. Retail sales, that's going to be a point to watch for. If it does come in negative 0.2 or even a bit worse, and that's not going to help the US dollar if that does get broken down even further. So there is a weakness there anticipated, as well as the core retail sales as well. So something to pay attention to there. And for now, obviously, there's not a lot of trading opportunities for the US dollar until we sort of see a little bit of clarity. I mean, in the Aussie markets right now, we are seeing the equity markets a little bit stronger as well. we've got about 2 hours to go, though. You can see sometimes you think there's strength and then it starts fading away to end the week. So you have to be careful on the Fridays as well with that too. So that's definitely something to pay attention to. And some more interaction here in the chat, which is good to see. Now, we do have Kim Hong back as well, and I just wanted to check. Are you up next, Kim Hong, with your trade idea, and then Jin to finish off? Because I don't want to surprise anyone.
He's coming up next with a wrap.
Oh, he is.
And then after his analysis, and then after
No.
Well, Kim Hong, I'll just let you have the floor here and do what you've got to do. But
yeah, I'll just do what I got to do, and that's it. Nothing extra. All right. Yeah, so hi guys again. I'll be back for a short while, I guess. Yep, so today I'll just be sharing a trade idea with you guys. Okay, let me just share my screen first. Okay, this is actually oh crap, I think my screen just got hanged again. All right, anyway, so this trade idea is on dollar yen, okay, testing 1.5-year high. So the motivation behind this trade was actually due to the FOMC meeting, okay, that was, I think, when was it? You see, that's what happened when you are away from the market for quite some time. Just couldn't remember the dates, okay? Well, the most recent FOMC meeting, okay, you guys already know, hawkish tone was being sent out, and we see like the Fed is actually carrying forward their whole projection of a interest rate hike, okay? And they are actually, very inclined towards a tapering of the quantitative easing in November, okay? So that actually led to strengthening of the dollar and things like that, right, across the board. So which is why, the main motivation behind this trade idea was due to the Fed's meeting, okay? And of course, the rising bond yield at that time, to a 3-month high of 1.5%, okay? So I think I'll just go straight to the chart. It's probably going to be clearer. Okay, so this trade idea is actually based on a daily time frame. All right. So as you guys can see over here, there's a blue line, the 112 handle. So at that time, once the Federal Reserve actually sent out the hawkish tone, it actually traded to this 112 level, which if you look at the weekly chart, all right, it has actually tested several times for the past 3 years, okay? So what you're looking at right now is the weekly chart. So this over here is 2019, okay? 2019, 2020, and 2021. It's like a close to 3-year high kind of thing, right? So we've seen several rejections of the 112 level, okay, tested and bounced back down, tested, bounced back down, tested, bounced back down, and even this year as well. So this time around, with the hawkish FOMC tone being sent out, I was actually wondering, will we see a break above the 112 level, right? I mean, after all, this is I would say this is the strongest FOMC meeting, the most hawkish one for the past 2 years, right? I mean, for the past 1.5 years, we see COVID, so nothing hawkish coming out from them. Okay, the previous year, back in 2019, okay, before COVID started, nothing much as well. Okay, so which is why I felt like if it actually breaks above this 112 level, a buy level at 112.5 would be essential. And okay, fortunately, okay, it actually hit and break above the 112 handle. Okay, so it went up by around 100 pips. Okay, and I decided to close it. Okay, because as you guys know that CPI, inflation data, okay, and the employment data are two of the most crucial economic indicators that the central bank is actually paying attention to at the moment, okay, because that will directly impact whether or not the central bank will carry out the QE tapering, and in the future, okay, carry out a interest rate hike. All right. So with that, okay, to be honest with you, okay, at that time, before the US CPI data will be released, okay, I was actually very positive that the data is not going to disappoint. All right. So on hindsight, of course, we can say this, and eventually we would have held on to the trade, and it might actually hit TP. Like right now, it's coming close to TP level, right? But at that time, I just felt that it's better if we just close our trade for the target, because after all, we are making quite a nice amount of pips, right? 100 pips at this golden line, dotted line level over here. Okay. So after the release of the US CPI, okay, yes, we did receive positive data coming out from the Bureau of Labor Statistics. Okay. Then, dollar yen just hovered for the next couple of days before, okay, moving up at the moment. Okay. As you can see that it's probably close to like some 10 pips away from the TP level. All right. So I would say the main takeaway this time around is this. All right. There will be times whereby when you guys are trading, okay, and you don't know if you should close a trade. All right. Especially when there's major data, upcoming major economic data releases or monetary policy meetings. Okay. Like this one over here, the release of the US CPI data. Okay. So I think recently there is some conversation on trade management over at our Ecofin platform, right? So I actually suggested, if you guys want to sort of like manage your trade, some ways being mentioned over there is one way is to close your trade for profit. Second way is to trail your stop loss, okay, to either a break even or maybe like some positive figure, right? Positive pips. Or you can actually, another way is that you can partial close your trade. So for example, if you are trading at, let's say 0.5 lot, all right, you can actually close your, close like 0.25 lot for your profit, okay, that you are making at the moment, and maybe trail the remaining half to the break-even level, okay, and let it run and take a risk. So there are actually many ways to go about doing it, right? So you guys have to find the way that suits you most, okay? Most importantly, based on your risk profile, your risk appetite, okay? If you are those kind who likes to, go on a roller coaster ride and things like that, then just by all means, hold on to your trade, right? It may hit TP like this dollar yen trade idea that is, going to happen probably in the next 2 hours or so, all right? It may actually go all the way back down, to hit your stop loss. So depending on your risk profile, depending on, your psychology and things like that, you can actually adopt to different methods of managing your trades, okay? But for this case, personally, I would prefer to close because I know that the CPI data is very crucial, okay? So with that, yeah, I've come to the end of my sharing, okay? So if you guys have any more questions on like trade management, which I feel it's one of the most important most important point when it comes to trading, okay, especially shorter term trades, not like those trades that last for like 1 year or so, all right, then, we can actually, carry on our conversations, our discussions in the Ecofin platform, all right? Okay, so with that, I'll hand it back to Scott.
Kim Hong, I've just noticed Noah snuck a question in there just as you were finishing about if you were expecting a rejection at 114 flat. So what are your thoughts there?
All right, 114 flat. Will I be expecting? Okay, so 114 is actually, well, it's actually my TP level, right? Will it actually, let me take a look at the calendar, all right? I don't think there's any major news coming up except for the retail sales data, okay? And the preliminary UOM consumer sentiment data that will be released later today, okay? Looking at the data expectation, personally, I don't think there's going to be a rejection, okay, on the 114 level, but, all right, but dollar yen may actually be hovering across, okay, hovering across the, well, I said hovering around, or some may say flirting with the 114 handle, 114 level, okay. Why is that the case? Because first of all, we might remember that today is Friday, right? So that means, traders may be closing up positions, they may not be as much liquidity as we get during the week, okay, on Mondays to Thursdays, okay, as for Friday, all right? So a rejection, I don't see a strong reason for a rejection of the 114 handle. But, if you are thinking of looking at a buy trade for dollar yen, personally, I would prefer to wait for it to break above, okay? Personally, right now, I would look at, say, 114.3, okay, to give me a more assurance, okay, that dollar yen has cleared this 114 handle, before standing a chance to go up further. All right. So you see, no major news to bring the dollar yen down from the 114 level, but there's also no news, okay, no major news that can actually bring the 114 bring dollar yen up above the 114 level. So with the idea that it's Friday as well, just be careful. All right, just be more I would say cautious when it comes to looking for further upside on the dollar yen. All right. Any more questions? Let me see. Okay, no questions for the time being. So, yep, back to you, Scott.
All right, thanks for that, Kim Hong, and Noel for the question as well. So we do have a few things posted in the chat, guys. I've just shared the article that Kim Hong wrote from the 30th of September, just going through this trade idea on the USD yen. And also, if you can, share the link around for the live currency call as well. And I've also got the YouTube channel link there as well that we have for LCMS traders. And also, we did have a poll to stand for anyone not in Forex Briefcase. I've got the link up here now, just above the disclaimer. And I would strongly encourage you to check that out as well. Fill your details out in the information box using the link, and then we'll get in touch with you. But we've got the cat up next with Jindal Tai. He's going to go through the news and what is looking good for any potential trade ideas as well. So I'll hand it off to you now, Jin.
All right, thanks for that, Scott. As Renz was just asking, how do I do a partial close of a running trade? Can it be done? Renz, what we'll do is I'm sure one of the guys will tell you about that in the club platform. So we'll guide you through that in the club platform. But the focus today for the US CAD, same thing, like clockwork. What I do first, check out Forex Trading Asia economic calendar. Today being Friday, you can see that for the afternoon, not a lot of news happening. The main thing in focus, as the guys have been sharing with you already, the retail sales number for the US expected to go from a 0.7 to a minus 0.2%. Core retail sales looking to drop from 1.8 to a 0.5. I wouldn't pay too much attention to the wholesale sales number for the Canadians at this point, looking to go from a minus 2.1% to a 0.5. Traditionally, this is not a big price mover, but this could have some impact as it's being released in conjunction with the retail sales number and the core retail sales number for the US. If we do see these numbers being released the way as expected, that negative number, that drop from a previous 1.8, I think what we're likely to see is a possible further weakening in the dollar. All right, we're going to see a lot more volatility in the dollar because it is the end of the week. We're going to see some profit taking. We're going to see it bounce around a little bit more. But I think in the overall view, in the overall scheme of things, we'll look for the dollar to be slightly weaker again. What this means is that looking at the chart here, the dollar index, I kind of tend to end up contradicting Scott a little bit more, yesterday and possibly even today. I think that the dollar index on the H4 time frame, yesterday when I spoke about it, I said it was about there, and I said it was going to test 93.80. So it did that at 93.80 with a bit of a pin bar. At this point, I think that it's going to sit in a bit of a consolidation before coming back down to test even possibly towards 93.56. I think it might come down to what it did the last week before bouncing back up again. This is probably going to be that continuation from the overall sentiment of the market that we're seeing the dollar weaken. We're looking at that continuation, but I don't think this will be a long-term effect. I do think that as we head into the end of October towards November, as they start talking about the tapering and possibly some monetary policy adjustments. If I'm not wrong, I read somewhere that that Biden has already signed off on the budget so that they avoid the debt ceiling crisis on the 18th of October. Putting all that together, I think that we're going to see it test a little bit lower at this point before bouncing back up towards 94.50 and possibly even higher. So with that short-term view, short, medium-term view, what to look out for, US CAD on the H4 time frame. Club members, you've seen me post up the trade already on yesterday about my US CAD. I think that was that trade downwards. I didn't catch that last move because I wasn't watching the market. At this point right now, I think that this is the H1 time frame. I think that we're going to see it sit across, similar to what we see on the H4. We're going to see it sit across a little bit before testing lower. Sit across a little bit before testing lower. So what you could be looking out for is for it to break a very short, very quick trade. Look for it to break below that 1.2349 level. Break below 1.2349. You would have a good 70 pip take profit level towards the downside, towards the 1.2273. Your stop loss could be a 30 pip. You're looking at 30 pip stop loss, 70 pip take profit level, 1:2 or 1:2 point something. A good risk reward ratio towards the downside. But with that said, I still do think we're going to see it sit in consolidation a little bit before it does break towards that support level. Relatively straightforward on the US CAD. I wouldn't be, if it does bounce up, I wouldn't be looking to buy it up just because that for the past 1, 2, 3 weeks, it's been dropping quite significantly. So I would still be looking to follow the trend to sell it towards the downside. And because we have that special request, I'm doing a quick recap on the yen pairs. The US yen on the H4 time frame, Kim Hong has told you all about it already. 114 is his take profit level. If you haven't already jumped into a trade at this point, it is sitting at 113.91. I would say wait for it to break. Let it break and close above 114 before trying to see whether it can head up towards that 115.83 level. Bear in mind, I am reminding you that it is going to be expected to have more volatility towards the end of the week, but I think in the medium term, we could see that move up towards that resistance level. So not too late to jump into that yet, but wait a little bit, let it break above that psychological resistance level. For the euro yen, it's moving as expected according to that green line there. It has broken 131.74. I would say that it looks like a good place to be buying at this point, slightly high, but if you will be looking to buy at about 132.23, your stop loss at a very big level could be 60 pips, or you could go maybe 40 pips. Your take profit level will still be about 120. So even at a 60 pip stop loss, you're looking at a 1:2 risk reward ratio. On a 40 pip stop loss, you're looking at a 1:3 risk reward ratio towards the upside. So still valid, still possible for the euro yen on the H4 time frame. And then back to the pound yen, it looks like it's breaking. It's closed slightly above that 155.63 level. I do think that it could still head towards the upside, but it looks like it might be a little bit early. So on the contrary to thinking whether you're a bit too late, the pound yen, because of that line and the zone that we consider, it might still be a little bit early. I would look for it to close above, maybe above that 156 level before looking to buy. You would still have that 60 pip stop loss for that very, very good upside, but you could also be looking to close anywhere in the middle of that. So quite short and sharp on the CAD, looking for that downside after that consolidation. The US yen needs to break above 114. The euro yen looks good at this point right now, and then the pound yen will probably have to go past 156 before we'll see that further upside. So not too late to get into any of those trades yet. In fact, maybe a little bit early for the pound yen and also the US yen. With that said, I'll pass it back to you, Scott.
All right, thanks for that, Jin. And also, I've just shared the thoughts as well on the trade ideas. And also, Rance, I found a very handy video on how to close out partial positions on MetaTrader 4 as well. And I've shared that in the trading floor chat as well. And what I'll quickly touch upon exactly, we've got the new wrap for Kim Hong to learn. Let's quickly touch on crypto here. We'll do Bitcoin and Ethereum for anyone that does follow that. It is Friday, so let's have a look on the daily time frame now. We've got, look, Bitcoin has really been on a bit of a tear. So in regards to this, a disclaimer would be I don't trade this actively. I do have positions taken last year on this, and I haven't really added. In regards to if you were watching this and saying to yourself, oh, I've missed it, I would say, 60,000 is going to be a big psychological level. And if it does break that, then we've got, almost all-time highs to consider if we go to the weekly time frame. So I would say wait for it to break through 60. But again, all of this would be for aggressive participants in the market because the leverage that's available and how Bitcoin does move, I would say wait for the US session to get a little bit of clarity into the US dollar direction as well. But if we see a little bit more weakness as well, that could really help the Bitcoin story longer. And it is looking pretty, I didn't realize how bullish it was. I don't check it actively. So a break of 60,000 would be quite key to me for an entry. But again, in regards to a stop loss, you want to take a small position based on your account because things do like to pull back and then rocket up aggressively. So please be aware of that as well with Bitcoin, but it does look very bullish. Past 60,000 would be an entry there. And then Ethereum, we are really close to 4,000 now as well. And we go to the weekly, you can see that it is approaching all-time highs there as well. And I would say now crypto does trade across the weekend as well. But again, the institutional participation is the end of the week is for tonight. So be careful as well if you are entering. And I would say potentially wait to see what happens when it gets to 4,000 first. My thoughts on the crypto pairs, but definitely exciting in this space as well. And again, I want to share the link for Forex Briefcase as well. I see a few people aren't in that as well. Had a very strong year. Again, we started back in 2018 in September. And I would just say check out the track record on the website. And I'll just share that now to everyone. Really just something that it's conservative, but it still returns a really nice, steady, consistent, stream of gains, especially with conditions present like they are as well. And you might as well learn Forex, but actually let professionals manage your account as well. So I've shared the link there. I've shared the trade ideas, and we also will be sharing the summary of the call. So I'll be going through a bit of a recap like Jin has gone through with the yen. But that is the end of the call there, guys. I just want to quickly go through if there's any questions as well. Is there time for Kim Hong to share his thoughts on the Kiwi Swiss?
Yeah, sure, no problem.
Kim Hong to share about the Kiwi Swiss, and it's also time for Kim Hong to share a wrap as well.
Oh no wrap. It's just Kiwi francs. Okay, basically stay out of Kiwi francs. Okay, I just look at the chart. It's, oh my goodness, it's not going anywhere. All right. Few weeks ago, okay, I would say that I'll be quite bullish on Kiwi francs. Okay, because they're the first who put a complete halt to the QE, all right? And they were actually looking at a 0.5% increase in interest rates, okay? However, due to whatever's been going on recently, all right, the RBNZ just rose interest rate by 0.25%. That was actually a dovish hike, okay? And I think they are still ongoing. The whole ongoing of containment of the COVID virus in New Zealand is still, is still like ongoing and still not complete yet, I would say, okay? So at the moment, yeah, just stay out of Kiwi francs. Try not to trade it. The chart is just all over the place and, there's no reason for me to trade, all right?
Thank you for that, Kim Hong, as well. And we also had another question from Ken. Thank you for that too. I hope, all right. Some good, yes, it's a 38 winning streak. Thank you, Steve, for correcting me. I was incorrect with 36. So yes, 38 winning streak on the Forex Briefcase account as well, guys. So check it out. One more thing, there's a 1-month trial for the LCMS Traders Club using the LCMS Traders link that I've sent as well. And 41 from 43, that is impressive. But thank you everyone for joining us as well. Hope everyone has a great weekend. I'll see everyone in the Traders Club as well. Bye guys, thanks for watching.